From political back and forth to the politics of our government support for some banks over others, particularly banks where the CEOs are huge or the banks are huge and they give a lot of money to Washington and they make a lot of money using your taxpayer money to speculate with. 140 banks, meanwhile, have failed this year. That's the most we've seen in 17 years' time. And most of the seized banks, yes, were the small ones. A new study shows some light as to why that is. Researchers with the University of Michigan found that banks with strong political ties were more likely to get government bailout money and more of it. For example, if a bank had an executive on the board of the Federal Reserve, remember the Federal Reserve, a private institution with senior financial executives administering it, well, if you were on that board, you're 31% more likely to get a bailout. Now, again, bigger banks also more likely to get bailouts, and that's also bigger banks more likely to be on the Federal Reserve. So there's another variable there. If the bank had a connection to a lawmaker at all in the Finance Committee, 26% more likely to get billions of dollars in taxpayer money. Again, bigger banks also more likely to have connections in the Finance Committee. In response, one bank industry lobbyist said the study was skewed because it did not exclude 9 of the largest banks that he says were pressured into taking the bailout money. It sounds like that must have been a cover-up in his eyes. And he points out that the $116 billion has been repaid with interest. Quote, this demonstrates the banks were excellent stewards of the taxpayers' money. In the spirit of the holidays, well, we're going to let that one go. The maddening backdrop, of course, for all of us, sets the stage for the president to sit down for the first time, not with the big bankers, who honestly can't be bothered to deal with the man, but with the community bank executives at the White House who actually are respectful and potentially deferential to the U.S. government. The president urged the small bankers to do more to increase lending to small businesses. Matt Gams, president and CEO of the Chicago area's Diamond Bank. He attended yesterday's White House meeting. We're also joined by Barry Ritholtz, CEO of Fusion IQ, and Mr. Capehart. We'll get to you in just a second, in fact. But Mr. Gams, I'll begin with you. What did the president say to you?
Well, good morning, Dylan. The president was very gracious in inviting us, 12 community bankers from around the country, to come and sit down for over an hour and talk about what we were seeing in our markets and what we were doing. A very diverse group. And he was stressing to us that, we didn't feel that we were the cause of the problem, but that we were all in this together and that we had to find our way through it. I mean, the reality is that, more than half of the loans that are done to small businesses under 100,000 are done by banks like me that are smaller than $1 billion in size. And I think he recognizes that we're a source to help solve that problem.
Yeah, Barry, what I think a lot of people may not understand, or what I was even sifting through it myself, the large banks were structured for the benefit of the executives and the people that work there to accumulate assets and accumulate risk so they can make a lot of money. But they are not designed to lend money. In other words, they are not incentivized to lend money.
Well, especially since the TARP came along and all the massive
Why is that? What does that have to do with? Explain briefly why that, how that factors.
Let's step back
and look at
the way banks make money, at least before the crisis, is they'd find someone to borrow money and charge a difference between their cost of
Matt
cash.
would make me a loan.
That's right, and you'd pay him back with a little vig. That's how the banks make the money. Now things have changed. The Fed has taken interest rates down to 0%. The bank's problem is because they don't have enough capital.
Keep talking.
All right, I'll be
a
the witness
ghost story.
Right. The banks don't have enough capital, and they have too much debt, too much leverage. So what they're doing now is pretty rational. They're not lending out money. They're borrowing it from the Fed at 0%. They're lending it to the Treasury at 3%, and that 3% essentially is free cash for them. So why would they do something risky like actually lending money to people when they could just turn around and capture free money due to the Fed's bailout?
Matt, did the president get into with you any expect? In other words, when you say to the president, listen, we don't know where the economy is going, we don't know what the future is, so we have to manage for our risk, and we have money that's being drawn away from us and into other pools where I honestly can get higher returns on my money elsewhere. And so how do I create a banking flow in the small businesses in America with a system that's designed to do the opposite?
Well, Dylan, I think that, the only thing that's comparable between the larger banks and small community banks around the country is that they both have bank in their name. I mean, in small community banks, the 12 that were present yesterday, and like mine, is, we are designed and built to loan money. That is the single product line that we have. We raise deposits and we make loans to small business. In a market like Chicago, which we're blessed to be diverse, I can really focus in on entrepreneurial people and small business, but I don't do arbitrage and borrow money from the Fed and buy treasuries. That's just not what our business model is about. Yep. And that's why I think we're a little bit more equipped to deal with it.
Yeah, real quick there.
And not only that, most of the small banks are AAA rated. When you look at the bigger banks with trillions of dollars in assets, these guys exist by the grace of the government. If it wasn't for that, forget AA or single A. These guys are essentially insolvent. The small community banks are the ones that are actually healthy.
And yet the big banks, because of the windfall state support being given to them, will have record profits this year while introducing almost no value into the system.
That's right. The bottom line is spend a lot of money on lobbying, know a few politicians, behave recklessly, and when things get bad, don't worry, the government will bail you out if you're big enough. And that's the unfortunate legacy of the bailouts.
Well, and again, 2009, the year of the lobbyist, 2010, TBD.
Let's hope.
TBD. Matt, thank you so much. Barry, thank you.